Moments to go until the closing bell, and stocks are still in the green.
This despite another record high for oil. Fannie Mae, though, is jumping right now. So let's bring in our Fox panel, because this on a day when D.R. Horton had a loss of $1.3 billion for the quarter. A lot of things swirling around on the floor, I'm sure, Tracy, there at the NYSE.
Yeah, that whole Fannie story is interesting because it was down a ton this morning, came back. A lot of it had to do with the short covering because they said they were going to start to raise capital. Raising capital can mean actually a good thing for the stock that gets everybody in a tizzy, and they got to cover their shorts because they, of course, the shorts are anticipating the stock's going to keep going further. So that helped turn the market a bit. But keep in mind, too, of this 57 points, most of it goes to Chevron, Exxon, Microsoft, Alcoa. Those stocks are all up pretty decent today on the Dow. And that really makes for a fair chunk of our gain today. We were down 80 points this morning. So really, we've swung about 140 points here today. Kind of a decent move considering. And again, it was all about oil. Although, as Alan Valdez was saying earlier, many people are confused by this whole oil thing. Oil's up, the market's up, it's not normal. Many guys down here don't even know how to trade on it. But they got to get their money back in this market somehow, and we are seeing buy orders come across the tape. Not to mention, the volume is a little bit better than it was yesterday. And as you were saying, it's the commodities today. It was the oil exploration stocks that were big winners. That group was up 5.3%. Anadarko being one of the leaders down here, Apache, Noble, Hess, and of course the coal stocks all up, Peabody, Massey, and gold. Again, gold stocks were up. The biggest loser down here today, Playboy Enterprises, believe it or not, had a dismal quarter. Apparently you don't have to, you can get it for free on the web, so why should you pay for it after all, I guess. But otherwise, we're holding. We're here 56 points up.
Peter says Peter Schiff, and I can't imagine Peter Schiff at the Playboy Mansion. I'm sorry, Peter. I just can't imagine. But you were at their party at their Kentucky Derby party.
Yes.
Congratulations.
Was Hef there?
He was there, yes.
Yeah.
Thanks for the visual, David.
By the way, did you talk to him about gold?
No. I actually, by the time I got there, he already left. I got there late.
Peter, did you find a way to be miserable at that party, too?
I'm not miserable.
He's happy. He sleeps on gold.
I own gold and oil. Why should I be miserable?
Actually, you don't go down there to see Hef anyway, do you?
No, I saw the Derby and I had some fun.
We kid because we love. But
what there's the thing what they're talking about with Freddie. I mean, the news is horrific. But the news is horrific. Sure, they're going to raise capital.
Horrific, right?
Yeah. Well, they're going to raise capital because without it, they'd go bust. But the problem is they're going to issue a preferred stock. It's going to have a huge dividend. It's going to dilute the dividend on the common. This is bad news for the common shareholders. Not good.
But don't the people buying in today know that?
I don't know what they know.
They're savvy investors.
Look, I think they're covering shorts. They're booking some profits, and they're going to come back. The stock's going lower. It's bad news.
I mean, there's a lot riding on these two companies being solvent because these are the vehicles that the government's using to try to rescue the housing market.
And the government might have to, they haven't had to before, but they might have to come in and rescue these companies. So they're almost fail-proof.
Yeah, they are, but that didn't help the stock, stay in the 60s, now down at 30. But we have to watch these companies.
It's not countrywide, though.
Very carefully. Well, they're not, it's not countrywide because the government has to keep these two companies in business.
Does it amaze you, Terry, that the government paid some 200 employees at OFEO, the regulators of Fannie and Freddie, and still all of these problems happen? I mean, does that speak to government access?
It doesn't surprise me at all. But both these companies are basket case. I mean, Fannie didn't file its financials for a couple of years. If it was any other company, it would have been kicked off the New York Stock Exchange.
And yet, Franklin Raines from Fannie walks away when you add it up, even though he had to pay some fines, with about $75 million.
Well, that's the way it goes on Wall Street. You lose.
That's the way it goes inside the Beltway.
Yeah, but the problem is too for these companies, what they're all trying to do, and the government is loosening up on their lending standards and their capital requirements to encourage more reckless lending. And what they're trying to do is prop up home prices, but they have to fall.
Be quiet for a second because there's a beautiful woman that wants to talk. Victoria, go ahead.
Oh, well, I completely agree. We're relaxing the standards on these companies to try to ease the pain. But gosh, I think we're in for a whole lot of pain at some point when these companies get slammed by lower and lower housing values. I mean, this could be a massive taxpayer bailout that would make Bear Stearns look like a minor event in Wall Street history.
Yeah, that would be a horrible situation. I mean, Terry, even Warren Buffett says, it's a good thing what the Fed did to bail out Bear Stearns because now he doesn't see another financial meltdown of that caliber.
Yeah, probably not of that caliber, but, you know, who knows what happens with Fannie and Freddie. And President Bush, to his credit, went kicking and screaming into loosening the standards on these companies and letting them lend bigger mortgages. He didn't want to do it, but finally he was convinced to do it.
Franklin Raines was back in the Clinton administration. That's when the shenanigans that Fannie and Freddie go back
they've been going
throughout all
everybody.
yeah.
But remember, all the bad debt that forced Bear Stearns under, it still exists. Now it's at the Fed.
Exactly.
I mean, the losses are still here. We're just postponing the pain. It would have been much better, as bad as it would have been, to have allowed Bear to go under, and J.P. Morgan and Merrill Lynch and Lehman Brothers. It would have been better than what the Fed did.
Is Disney going to meet its estimates quickly?
Oh,
yes or no?
I have no idea.
What do you think, Victoria? Is Disney going to make it?
Disney's.
Are they going to meet their estimates? She doesn't know. What do you say, Terry?
I don't look at Disney.
Terry's the only one willing to go out on the limb and saying, I think they will. All right, as the closing of the bell rings and the people cheer, it is a green day on Wall Street. We're happy that there were profits that came into the street, but the business day continues. And here's the financial news you need.